Hey everyone, so one of our premium members asked me to take a look at a price chart of AT&T. Now I have not looked at a price chart of AT&T in a long time, so I thought it would be, apart from answering this trader's question about what the wave count is, I thought it'd be a fun exercise to take you through what goes on in my head when I'm looking at a fresh price chart. So I zoom out, and whoa, this looks kind of messy. So what we have here is a sideways set of waves, right? Now there are very few patterns that can be sideways in nature. Flats are one, triangles are another. I don't have quite enough information yet to ascertain what's going on here though. Now this is a multi-year sideways correction, all right? So I'm gonna zoom out here to account for that multi-year sideways price action. And well, this is pretty interesting. Now I have a little bit more information, and the first thing that catches my eye is that AT&T opened trading around $3.50 and went all the way up to over $45, which is that's over a 1,200% move in percentage terms. Now, because the percentage move is so big, we're going to switch to a log chart, and switching to a log chart should help clarify the picture a little bit. And boom, there we go. So whenever I'm starting a new price account from scratch, what I like to do is just come up with a rough outline and then start filling in the subwaves to see if I'm actually on the right track or not. So I'm going to go 1, 2, 3, triangle 4, and then 5. So triangles can only occur in very specific parts of a complete market cycle. And in an impulse structure, a triangle can only occur in wave 4. So I think this fits. The question now is, does the rest of this advance count impulsively? And I think the answer there is definitely yes. It's got the right slope, and we can start filling in the subwaves. So I've got waves 1, 2, 3, 4, and 5 for wave 1. And now wave 3 looks a little bit more challenging. And you can see, like, it doesn't take me very long to fill this out. 1, 2, 3, 4, 5. So that's wave 1 of 3. This is wave 2 of 3. 1, 2, 3, triangle 4, 5. So that would be 3 of 3. 2, 1, 2, 3, 4, 5. Nope. Sorry. This is 3 of 3. This is 4 of 3. And this is 5 of 3. Okay, so now we're going to drop down one more degree of trend to fill out the subwaves for wave 3 of 3. All right, so I think what we have here is wave 1, wave 2, 1, 2, 3, triangle 4, 5 to complete wave 3 of 3. This looks like wave 4, and then this would be wave 5 of 3. And it looks like we have a eensy-weensy little triangle here. Okay. All right, so I'm pretty satisfied with this count. I now have to see if the triangle count fits. So we've got A, B, C, D, and E. And indeed it does. This looks like pretty much a textbook barrier triangle. The only other interpretation I could reasonably have here with the triangle is to move my labels a little bit and say this is wave B, this is wave C. We need another rally in wave D, and then another decline in wave E to complete the triangle. I don't think that's likely, however, because one, this is a 3-wave move, this is a 3-wave move, this is a 3-wave move, this is a 3-wave move. So we have basically the minimum requirements in place to count the triangle as complete already. I don't really see a need to complicate things. I mean, yes, have the alt count in your pocket, but I don't really see a need to complicate things unless the market gets complicated. And right now, the market's not complicated. Right now, there's good reason to believe that we have completed wave E of this triangle, and we are going to be rallying hard in a 5th wave. 5th wave targets, well, let's see. We want to look at a Fibonacci multiple of the distance traveled through waves 1 through 4. And yeah, I think anywhere from 100% to 161.8% is a reasonable rough target right now. We start narrowing down the target as wave 5 starts to subdivide. As wave 5 starts to subdivide, we can make this target more precise by examining the relationships within the subwaves of that wave 5. So there we are in 5 minutes. And I did this even faster the first time I did it for the premium member because I wasn't doing it on video. The point I'm trying to make here is that everyone can get to this level where we can count charts from scratch fairly quickly. Now, this was not the most complex chart I've ever come across. There are definitely some stock charts out there that will make my head spin. And you know what I do with those charts? I tend to move on because if I can't count it, I don't want to trade it. Now, as an analyst, my job's a little bit different. If it's my job to provide an analysis for a price chart that I can't really trade or have a hard time counting, I can come up with a count for it. But I'm going to be upfront and say, look, the price action is such that it's difficult to be highly confident of any wave count at this particular juncture. We need to wait for more market action to develop in order to narrow down the possibilities further. In the case of AT&T, however, that doesn't really seem necessary. This looks quite straightforward. So I hope this was helpful. Hope this spurs some discussion. And if you have any follow-up questions, let me know.